Hi everyone, welcome back to the podcast. I have Arun with me and he has some more questions which need some answering. So what questions do you have, Arun?
Sir, I have taken 4 questions from comments of Berich and Moneypage YouTube channel. So the first question is, it is from Karthikeyan. Hi Anand sir, why NBFC banks keep on raising home loan interest rate even though RBI kept repo rate unchanged?
Yes, even RBI is very upset. The Deputy Governor, Mr. Rajesh Rao, has criticized microfinance institutions from charging high interest rates to borrowers and warned them against misusing regulatory freedom because in 2021, RBI removed the interest cap of 24% on micro loans, giving full freedom to these small NBFCs and microfinance companies, saying you guys can charge whatever interest rate you feel like charging. And they have freedom. You're right. They can charge what they want.
Yes.
And problem is NBFCs provide loans to people who usually banks don't provide loan to. They're not considered to be very secure, very safe in the traditional sense.
So wherever the bank rejects them, they'll go to NBFC for their loans.
Correct, because banks have already have that they're ruling that market. So these guys are new players and they're very small compared to banks. So for them to participate, the best place is it's normal business sense. Nobody's catering to all the people who are being rejected by the banks. They also need loans. They need money. Nobody's catering to them. So these guys are going instead catering to them. But the reason why the banks are rejecting them is because their credit worthiness is not so great. They either will not have a job where they're getting a salary or they have variable income, meaning some months they get a lot of money, some months they don't get money. And maybe they have already taken loans and they've not repaid the loans properly. Okay. So there's a risk involved in giving them the money. It is like as an investor, when you're looking at bonds, you'll see some bonds which are unsecured, which have very poor rating, offering very high interest. So they'll offer like 18% interest for every lakh which you give them. Compared to a very good company like Tata Motors or some other company only offering 9%. So you'll be wondering, why is that guy giving me 18%? And this guy is giving me 9%. Because there's a risk. And when I tell you there's a risk, you will say, I don't want that, put my money there. But the same is reverse and true, no? If you're a guy lending money and you don't want to give risk, so maybe banks will not give these guys money. So only NBFCs are catering to these guys. So the trade-off for them is, because they're taking on this risk, they need to charge a higher interest rates because the number of NPAs in these loans will be high.
So let's say get their money back.
Correct. So let's say in a normal bank, they give out 100 loans. Out of the 2 default.
Yes. The default ratio is
much higher in where NBFC is loaning. So they give 100 loan accounts, maybe 25 will fail. So he needs to cover that cost. So how is he going to cover that cost? By charging higher interest. It's not that he's trying to make more money off you. Yes, through the public, when you look at it, you'll think, why is he charging me so much? He's making so much money off my back. State Bank is only saying 12% and he's saying 20%. Why should I pay him 20%? This is unfair.
Yes.
This is the reason. He has to make money. That's correct. But at the time, he has to secure his risk. If you are taking that NBFC bond or you are bought that NBFC share as an investor, you'll want that guy not to default, no?
Yes.
So to protect, they do this. There's no other option. If you guys can think of any other way NBFCs can secure their loans, you tell me. Don't immediately say there's legal recourse, because in India, you know how the legal system is. Justice is not as efficient as everywhere else in the world. Sometimes it can go years, can take for a case to happen. I was reading in Twitter about a man. His father had an account. Someone had taken money out of that account, 4 lakhs, faking his father's debit card. And he went to SBI and told them this happened. SBI said, sorry, we can't do anything. So then he had to go and approach the court. Then court after court he went. Then finally he died off.
That person who
put the case, he died. His son continued fighting the case in court.
For the 4 lakhs.
Yes. Then after 6 years after his father's death, now his mother has been awarded that 4.5 lakhs. What's the point? So that is the situation when it comes to legal recourse for even banks. You know how banks are chasing Vijay Mallya, chasing Anand Ambani, chasing all other people who are defaulted. Those are the famous names. Anand Ambani and Vijay Mallya are famous names because press covers them and they've lived very flamboyant life. So we all know who they are. For every one Ambani or Vijay Mallya, trust me, There are thousands of them which we do not know the names for, who have defaulted even bigger amounts. You have to go and look into the bank records and you'll see huge defaults all sitting there. So there's no choice. This is what NBFCs have to do. Next question.
It is from Sagav. He asks, your insights are useful to us. Can I know which app you use to analyze fundamentals of a stock?
Well, global news, if you talk about, Anand uses Financial Times, The Economist, Bloomberg, Wall Street are for global. Mainly, he uses these. Then for Indian, he has the Hindu, Business Standard, Mint, Economic Times is what he looks at for Indian news.
Okay.
So these are for news. And as far as information about the companies is concerned, you have to go to the companies. Every company which you want to look at investing, we look at the companies, they're all big companies. Those companies have a website. Under the website, there will be an investor relation section on their website.
Okay.
Inside that, you will find the annual reports and quarterly reports. So you can pull them down. They'll be in PDF format and you just have to read it and then all the information is there. If you're finding that very hard to do to start with, we use Screener. Screener also, you can go put the company's name. They consolidate and give you all the information. Sometimes information is wrong. The PE calculation, because it's just a software which is running in the back end. So someone would have fed the information wrong and it'll read it, give you the wrong output. Okay. So you have to double check the PE ratio and all that. Go check in a couple of other websites. Or go, if it looks really nice, the PE, go to the balance sheet, pull it down and see what the calculate the earnings. The earnings, quarterly earnings will be there. The annual earnings will be there. You take it and you know the price which is in the market right now. You divide it and you'll have the PE immediately.
So the next question is, if Anand sir doesn't like PSUs, why does he talks about stocks like Petronet LNG and IRFC?
No, you got it wrong. Anand does not hate PSUs. Anand does not have any liking or disliking of any companies. Anand is looking for investment opportunities as a value investor. Even Reliance, he doesn't hate Reliance. Right? He doesn't love Tatas. As an investor, he sees opportunities where when he puts his money, he's going to get good returns and it's safe.
Okay.
He has nothing against Reliance. It's just that the way Reliance is doing business, and Mukesh Ambani right now, the way he makes decisions and he does business, as a very small investor, it makes him feel nervous. Right. Okay. So when he puts his money, he says it's not very transparent. Okay. It's not very clear. The way whatever he decides to do, it's all held within the family. And, so he says, and the way he decides to make decisions, and he says he's going to do something and doesn't follow through with it. So it makes him a little nervous as an investor. He doesn't know where his money will go. In terms of now PSUs, coming back to the start of the question when we talked about PSUs, same thing with PSUs. It is run by the government. Government owns PSUs.
Okay.
Government does not run PSUs for profit. Right? Government runs PSUs for its own agendas. Some of them are political agendas, some of them are national agendas.
Okay.
And making profit is secondary. If you happen to make some money, they're happy. And government can afford to do that because government decides how much money is there in the market. If some PSU needs money, government can go print some money and shove it inside the PSU. And so that's why most PSUs are running sick. And the management doesn't have any freedom. The PSU's management is subservient to the government and the ministry. So they don't have freedom to do. Now, when it comes specifically to these two stocks Anand was talking about, there was an investment opportunity. Like I said, he looks as an investor, looks for opportunities. At that point of time, that company had an opportunity when putting money, gave a certain amount of return was there. Okay. And he explained in the video what is the logic behind it. Is it available today? No.
At that point of time,
correct.
The investment opportunity.
Correct. It's like catching a train. He says at this specific time, the train is coming to this specific platform. You go there, you can get on the train. Okay. You missed the train. You found out the train information 2 days later. You cannot go and stand on that platform and expect the same train to be waiting for you.
Okay.
That opportunity was missed. No problem. There are other opportunities. And Anand was always very keen on that you learn to find these opportunities by yourself. Like I said in another video, all experts were beginners in some point. Even Warren Buffett was a beginner in some point in time. He wasn't born Warren Buffett. Anand was not born Anand Srinivasan. They learnt as a beginner by reading, by making mistakes and learning. Now they're trying to teach much as they can So you don't spend as much as time as they spent learning. So your learning can be faster.
Okay.
But learning is a must. You cannot skip learning. If you skip learning, you will get burnt. Next question.
So the next question is, Cosmo shares have fallen considerably. What is the main reason behind it?
Cosmo first is a small company. Okay, it's not a big company in terms of market capitalization. Its market capitalization only 1,422 crores.
Okay.
Right? The PE ratio is 18. And they've been there for some time. They've been there from 1981. They're into plastics. And the main thing of plastics is oil. Because plastics comes from petrochemicals. Petrochemicals comes from oil. So it is on that pressure is there. Then also logistical pressures are there. What's happening in the Middle East and the Red Sea will definitely affect them. Other than that, there's market pressures happening. Their biggest competitors is Supreme Plastics. So there's a lot of pressure in that whole industry as a whole. So there's a lot of selling pressure on the Cosmo first share.
Okay.
So the price is moving down. Now, if you're asking me, will I buy this? I'm not even there. It's not even in my radar to consider. The thing about small caps, small as this is, it is like the wild, wild west. Today, let's say 100 small cap companies are there. 30 years from now, out of the 100, only maybe 20 would have become medium, large cap. Most of them will die away or be bought by other companies. So you can make a bet as if you want to. You studied it and you believe in it and you say, okay, they've been there 40 years. Then you can look at it. My only issue with Cosmo first is the person running the company is a founder. He's become quite old now. So he's taken this company from 1980s to this height he's brought it. Right? With his vision and his management and his leadership. Now the next new leader is going to come. It's the changeover and it's going to happen within the family. It's not like a professionally run company where it's a professional will come. Like Chandrasekharan will come and sit and run it. That's not going to happen. So the next generation, are they interested in running this company? Or as soon as this man vacates his seat, will they want to liquidate the company and sell it off to somebody, whoever the bidder is? These things have happened. So there's a lot of uncertainty for me as a value
same thing
investor.
happened in Cipla also.
Correct. So I do not know. And I'm a long-term investor. I'm not going to put money in Cosmo first and say next 6 months later I'm taking it out.
Okay.
If I put money in Cosmo first, I'll want to leave it at least minimum for 5 years. So taking that into consideration, I do not know. There's a lot of uncertainty there. And I track my favorite companies. Like I said, you should have like 5-6 companies which you track and you work on. That should be more than enough.
Okay.
Then more than that, you don't need to do. So if this is in your wheelhouse and you've been tracking this company for some time, or you know plastic industries very well and you know their packaging plastic is what the industry is, you have some insight and it's in your circle of competence, sure, look at it. But currently it's not there in my radar. But this is the reason it's correcting, because there's a selling pressure on it. More than that, yes, it does have debt. And small caps need to take on debt, and that's the only way a company grows. Like how you, me, and all of us grow. We all take loans. We take car loan. None of us are born rich. We all have to take loans, build our credit report. Once we have become wealthy, then you don't want to take loans because you have money. But initially, you have no choice, but to take loans to grow your business so that they're growing. You have to see if they're managing their loans correctly and keep a track on it, keep an eye on it. That you have to do by studying their balance sheets, looking at their quarterly reports. And we have done a detailed video on this, which should be coming out in Be Rich sometime soon, because it's part in our chain of videos which we have worked on. So it will come out soon. So when it comes out, you can catch more in-depth analysis on Cosmo first over there. Okay. Thanks for watching the podcast, guys, with me and Arun. And we'll see you in the next one soon.